a month?
A year.
A year.
$70 a year.
70. Well, that's a lot of money given these times.
Yes.
$70 you can actually do a lot these times. So that's
Right.
great. Actually, our time's running short, but there is one question that must ask you before I let you go. I know folks that are watching this mostly are Asian Americans, and being an Asian American myself, is that a lot of times our parents would leave their home to us or to their children. I think a lot of them, they always ask this question, and I don't think they always get a clear answer because they get it from different sources. And I know coming from you, that's directly from the source, is that the assessed value, the core value, like we mentioned earlier, Part 13, you set a core value. So if you owned the home 30 years ago, it's really advantageous not to do any kind of ownership change or trigger a reassessment of the value. For a parent to give his or her home to their child, how would that be reassessed, the value?
Well, basically, if a parent gives a home to a child or sells a home to a child, or the parent passes and the child inherits the home, what the child needs to do is to file an application for an exclusion for transfer between parent and child. It's under Prop 58. They can visit our website and download that application.
Okay.
If it is the parent's primary residence, then there is no limit on the assessed value that can be excluded from reassessment. Because as we said before, whenever there's a change in ownership, we, the assessor's office, would reassess the property to market value.
Right.
But in this situation here, where the property goes from a parent to a child, or even from a child to a parent, that particular transaction may qualify for an exclusion from reassessment, but it has to be applied for. It is not automatic. And so the person would have 3 years from the recording date of transfer to file for that exclusion.
And then for this, is there some sort of qualification? I mean, would it be based on income, or would it be based on inheritance you receive, or just as long it's a simple transfer from a parent's primary home to their kid, and you can get this exclusion? Is that
for a single family or for a primary residence, as long as it's parent and child, it doesn't matter on what the income is.
Or how much the house...
Right. So even if it's a primary residence, let's say their assessed value is at $600,000, but the market's at $1 million. It doesn't matter for the primary residence. However, if the parents own other properties, there is a limit of $1 million that can be excluded from reassessment on other property other than the primary residence.
And the child that receives the home, does that home have to be the children or the child's primary residence?
No, it does not have to be the child's primary residence.
Okay.
So even though it's a parent's primary residence and the child files for the Prop 58 and it's excluded from reassessment, that does not have to be the child's residence.
So the child can actually have that as a second home, third home, but they continue to enjoy the benefit of the original assessed value they got from their parent.
That's right. They would retain their parents' base.
Okay. Well, today we learned a lot from Carol, and we appreciate Carol coming down to our studio and share with us our viewers. And again, given this economic times, these are very valuable information. That's why the point that we're doing this show is to share with the public about things that most of us maybe don't have the time to do or ever, be aware or think about doing, but I visited their website last night, in preparation of this show. It's a great website. It contains a lot of information. And again, through our interview today, our show today, that just spending a little bit of time, it could save you a lot of money.
Absolutely.
A lot of money. Just that $7,000 exemption, I didn't know until I visited the website. I didn't know until I talked to Carol today that I actually can probably take me an hour, fill in 42 cents to mail in, right? You're not going to provide free postage. That I can save $70 a year. Mm-hmm. I mean, that's all you need to do. Spend an hour in doing this. So we really appreciate, Carol, you coming down and talk to our viewers and let us know about all these wonderful informations that can actually save us a lot of money. And again, our hearts go out to these victims of these wildfires. And again, please log on to the website. We'll have it, type it in our show, and that you can file for that. I think, what was the phone you mentioned?
For the wildfire? Yeah. For the misfortune and calamity.
Misfortune and calamity form, and then, that gives you some sort of a temporary relief, and as well as lower on your tax base until you rebuild your home. Mm-hmm. So once again, thank you very much for coming in, and we look forward to see you in the future.
Yes, thank you.
Thank you.